Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just broken above a quite significant monthly historical structure level. In fact, from here, all these previous rejections to the downside were created. And what we can see is that the market has now broken above this quite strong level of previous monthly resistance that is now turned support here. So as the market is testing this previous resistance turned support and rejecting it to the upside, we could expect more bullish continuation to be created away from this support level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that we have a market which is currently testing and rejecting previous weekly resistance turned support here. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the zone, so that previous resistance was turned support here. So what the market is currently testing here is previous weekly resistance turned support, and we can see how the market has already started rejecting this level to the upside. So more bullish continuation could be expected away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And what we know is that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse candle. And if we do that, we can see that the dead zone that the market is actually rejecting is the area in between the 0.618 and 0.786 Fibonacci retracements, which is also lining up exactly with this previous resistance turn support. So actually the level that the market is currently rejecting is a confluence of support area that we could expect this market to reject to the upside even more. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was around this area and explained all the reasons for which we could expect this rejection to the upside. Then again, after this impulse and correction, I explained all the reasons for which we could expect the market to create a new daily higher high. And after the creation of this M pattern from here, I explained all the reasons for which we could expect a rejection to the upside, then the correction and the continuation to the upside. And in the very last analysis, I explained all the reasons for which after the creation of this push to the upside, we could expect more bullish continuation. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, at the moment, from a daily standpoint, let's see what we have. But before we do that, I want to check what is going on when it comes to the commitment of traders. So essentially what hedge funds are doing in this market. Well, if we check the data for gold, what we can see is that lately with the last reports, we have seen a huge increase of the net positions. In fact, we went from having 71.4k net positions all the way up to having 207.7k net positions. So we had a huge increase of the net positioning, going from 71k to 207k. In fact, we can notice how longs from an institutional perspective got increased from 220.3k to 289.8k, and shorts got decreased from 148.8k down to 82.1k. So clearly institutions have been moving to the bullish side for gold, making it stronger. Now, if we move back to the technical side of this market, keeping in mind that institutions are adding longs, let's continue with our analysis. Well, also here from a pattern standpoint, it is quite clear how we have an impulse and correction. And as we said previously, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have the 50%, 0.618, and 0.32 Fibonacci retracements lining up exactly inside of this area, which is a quite strong confluence of support zone from a daily perspective, because it has all these three Fibonacci levels. And if we extend this level to the left, we can see how this was also the area from which this previous rejection to the downside was created, also this one, and also this one here. So this is all previous daily resistance turn support here, with also the Fibonacci levels all lining up in the same area of price, therefore creating a confluence of support zone. And inside of a confluence of support area, we could expect more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So what we could expect in a situation like this. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect in a situation like this is that if the market from an intraday perspective will shift from an intraday bearish market to a bullish market, at that point, I would expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.